Hello, traders. Welcome to the midday market recap. Good afternoon, Despia. We're just going to go through a few of our tools. The pre-market prep, make sure you watch that video. It's playing out pretty well, how we anticipated from this morning. We'll go through the levels we were looking at this morning, our transition areas, drunken sailor range, and then key areas that we're looking at as well as our tools. First thing I want to go to is our market trend model. This is basically a central core of our three pillars: sentiment, structure, and trend. Market trend model is based on the tick index. So this is showing you buying versus selling, instantaneous, what is happening in the overall market. So obviously we continue to be weak with the selling occurring. Bolded white CT continues to the downside. I know we've had some bounces on the SPX back and forth, but those have just been at key areas, bounce back to the upside. One of the things I want to note is that the red is starting to really start diving now down towards the cyan line. If this red goes under the cyan line, then we have what we call a ribbon flip. So that just is indicating that market participants are obviously selling more than buying, and then our longer look back period is starting to weaken pretty significantly. So as we said this morning, we're kind of at a junction point in the overall market. Obviously, end of the month, it could be weak. Heading into the beginning of October, it would be great if we saw some consolidation and then possible move back to the upside. But right now, the market is, indicating that there's more selling versus buying. And actually, the past 3 to 4 days, if we scroll back, really kind of what we were talking about. Sorry, on our market trend model, it started back on the 23rd, right around in here when we crossed below our colored ribbon, and we're indicating that there was a significant selling coming into the overall market. And our filtered cumulative tick was telling this also. You see this multiple down days. And usually once this significant selling starts via the filtered cumulative tick, it's not just a one-day event. Institutions take multiple days to exit positions. So that's kind of what we're seeing at the moment. And now still below the shorter term moving averages and trending down, and this colored ribbon starting to trend down to the downside. Filtered cumulative tick is fairly light at the moment. It is down, so institutions and larger market participants are selling. New highs versus new lows. New highs are still outpacing new lows, so we'll just continue to watch this as we head into the afternoon. The tick RC, which is the quality tick, actually looks better than the all of the exchanges. So we'll continue to watch this. This is how we base our mechanical portfolios, P-Trans to PX, as well as our wheel strategy. We posted extensive content about over the weekend. So again, this is right in the middle of our colored ribbon. This is our longer look back period, so this could go either direction. So that's why I said the market's kind of in neutral with the foot on the brake, and market participants are trying to figure out, which direction they want to go. So let's go ahead and look at our vol-m command. I'll go ahead and zoom out on the vol-m command. So this is SPX vol-m command. So basically, get you orientated. This is looking at the mass of market participants and where they're transacting volume at. As you can see, this bolded green line, that's our call centroid. It's basically flat to sideways. So consolidation is what we talked about. Now the linear fit line is diving to the downside because we had some larger orders come in. That's pulling that linear fit line down. But you can see the put linear fit line and the put centroid just flat to slightly rising. So again, this is not indicating market participants are speculating significantly to the downside at the moment. And you can see these strikes where they're at 66.20, 66.28, 66.30, 66.29.30. So this is an area that we want to watch the downside. And to the upside, 60.74, 76, 73, 75. So what I like to do with our volume command is scroll over these strikes and see where these out of the money calls were placed, and then kind of watch that centroid as they continue through the rest of the day. Again, this is indicating consolidation, both flat to slightly rising on the put, but flat on the call centroid. And you see that's what's happening with the price action. Basically, we've just been bouncing back and forth between two key levels. Let's look at the SPY. Same thing, flat call centroid to slightly down. So market participants not speculating to the upside. So a significant move would most likely not be occurring into the afternoon. Put centroid basically flat to up, so this is coming up under price. You see 662 where the speculation is at with these peaks. That's important to the downside. And then you see right along this area here, roughly 663.50 and 664. So those would be our two goalposts for the moment. If we break either direction, then that could lead to a little more weakness or a little more strength, depending on if we see these call centroids turn back to the upside. Our 0DT minute chart, again, this is showing your highest sensitivity areas, 6650 to the downside. We keep bouncing on that negative Gex gamma level there, that negative gamma bar, and then positive gamma to the upside. We see this large bar here at 6680, and then we see the key areas, 0 Gex 6645, so staying above that keeps you in a little bit more balanced environment. And then we see P trans at 6670. So if we did get above 6670, we'd be moving into a little bit more positive gamma call dominated structure. And that's where we could look for a move up towards 6700. Again, you see the highest sensitivity area on the gamma at 6680. So you'd want to move through those, and then that could provide some fuel to the fire for the upside. And then we already went over that. Let's go ahead and look at our trading view chart. So trading view chart basically is just doing what I was kind of what we were planning for this morning via our pre-market prep. We talked about the drunken sailor range, which was fairly wide here, 6640 to 6680, and then we talked about the transition areas. We were going to need to get over the P-trans level, which we already went over, 6670, as well as 0DT transition level, all expiries and 0DT. Again, we were within the overall drunken sailor range, so it was probably going to be extremely choppy. My advice this morning was caution, as we were most likely just going to ping back and forth between these levels unless we saw significant speculation to the upside or the downside. And via our vol M tool, we're not seeing that in either direction. And then the market trend model here is basically saying sideways to weak, and then the market trend model here is saying weaker, more selling there. So we're kind of just stuck in the middle. As you can see, we had that quick move up, and then really was not sustainable because we did not see out of the money call speculation come in, and the market trend model was obviously not indicating that there's more buying versus selling. So we pull right back down into that overall area, 6650, and then this overall 0DT transition area where we're just chopping back and forth. So if we lose 4540, then we probably look for a little bit more weakness to the downside, and then above 70, we'd look for a more positive move to the upside. The plan I posted this morning on X was basically the same thing. We were call dominated, so pullbacks were most likely going to be supportive as long as we stayed there. But the upside was going to be difficult because unless we saw a significant amount of out of the money speculation to the overall upside. The other thing I want to go over is our net stat command. This obviously gives us our highest sensitivity levels. This updates roughly every 5 minutes, roughly 10 minutes, sorry, and we automatically run these for our members. So again, these key areas, 6505, these in the money calls. This negative sign is due to the JPM strike hedge down there. But in the money calls below 6,700 to the upside are puts, and we see the charm at 6625 out of the money puts there, 6675 out of the money calls. So you can see that we're just chopping between those two areas. Gamma's at 6640, so if we lose that lower side at 6640, then that could provide a little bit of fuel down towards 6620, and then we see Vanna there if we see volatility drop, 6625, 6675. So you see we're just really kind of stuck. I've used the Austin Powers meme where he's in the cart and he's just going back and forth between the walls, and that's pretty much what's happening. We're kind of in this locked horns, in the money calls below us, in the money puts above us, and we're just kind of stuck between these two levels, as you can see, and just meandering back and forth. And you also look at our volume command that I discussed. Other than these two large trades, there's not a significant amount of volume transacting. We have a couple other tools that we look at for the overall strikes, but again, we're just kind of cruising sideways for the rest of the day. So again, unless we see a significant amount of speculation either direction, I would anticipate us to just be stuck between these two levels, and we'll continue to cruise sideways. I do know Nvidia was hitting a new high, I believe. So yeah, above 185, so that continues to the upside. Obviously, relative strength within an overall weak market, but everything else on the Mag 7 is just consolidating sideways, which is kind of what you want to see. Just consolidation into the end of the month, and then we'll see what the first of the month of October brings. So if anybody has any questions, wants to go over single stocks, I'll hang out for another 5 minutes or so. Any questions about our philosophy, our tools, how we're looking at the overall market into the afternoon? I pretty much went over that. Steady as she goes sideways unless we see a large amount of trades come in. Here's another chart we look at also. I'll pull this one up. This is our volume analysis here. volume concentration. I'll go ahead and zoom in here. So you can see these peaks here, obviously, but just so this is only getting up to the 700 contracts traded, and it's not really being sustained. And the calls, are being met with a little bit of puts, but calls were winning the battle here, calls were winning the battle here, and then we're kind of going back up again. That calls maybe winning the battle here, but just fairly sideways. You see a couple little peaks in trades here in the 600 per minute or over a minute contract volume here, 700, and then a little over 800 there. So just not significantly sustained volume to the upside or the downside. So that's really kind of why we're just continuing to drift sideways. And then, so if anybody has any questions about that, CRCL, yeah, we can look at that. I can't remember if that had enough OI. Do you remember that? I think it did. Yeah, it did. So call dominated above transition. So all of those are bullish. Peak X 150, so upside out of the money speculation, alive and well. Let's look at this expiry. So a web app, you just click these expiries on and off. So 150 Peak X CY 140. So we have a speculation to the upside. Looks good if the market would cooperate. I think obviously you could have some upside here. Let's look at after this expiration. So after this Friday, transition widens. Peak X CY stay at 150, so still bullish. Let's look for the month of October. How's that sound? Month of October, call dominated. Peak X CY stays at 150. So structure looks supportive, and the opportunity to go to the upside if the market cooperates. So hopefully that helps you. 140 would be the first area I'd look at. Obviously, these larger round numbers and half strikes are large gradients. But yeah, everything looks good on CRCL. So, as long as the market starts to cooperate. All the stocks obviously are correlated to one when the market's going down or pulling back. I mean, you'll see staples or defensives, if the market's pulling back. But in the end, if the market's going to sell off, all stocks are incorporated to one. Yeah, so those are out of the money puts below spot price. So that is speculation to the downside. But what you want to look at is this gamma condition over here, and then the net gex here. And then, so even though there's out of the money puts to the downside, the calls are winning the battle to the upside. Okay, so out of the money speculation is winning the battle. Now, I would like to see, obviously you see where these in the money calls are sitting at, right? So these round level numbers. So those are a large amount of in the money calls that are actually larger than the out of the money puts at that strike. And you can go over here and look at the call OI. These are in the money, so that's why these net deltas are positive here, right? These are out of the money puts, even though the put OI is more, but the delta is positive for these to the downside. So again, out of the money put speculation here, in the money calls sitting here. Yes, you would like to see this completely green. That would indicate even stronger. Another tool that we can run, I'll show you this, is our DBH command. So that will show you individually, I'll run it here and get it to you. So that will show us individually what is happening with the individual planes. So you'll be able to look at these separately. So above will be the right-hand plane, that's out of the money call speculation. Below will be the left-hand plane, that will be the put speculation. And then we have an aggregate, which is our delta balance. Okay, so it's running, lots of data processing this morning, so with our members. So here is CRCL. Okay, so this is the other command that we like to run for swing trading. And this gives you an idea of projection on out in time, right? So green is the right-hand plane. So this is out of the money speculation. So it's above zero. Delta balance is above zero. And then you see the left-hand plane, which is just what we were talking about, is below zero, right? So that's bearish. But when we aggregate these together, it's bullish. Now, obviously, we want to see this delta balance continue to rise. You'd want to see this right-hand plane continue to rise. And you'd actually want to see this left-hand plane start rising up also, indicating all the speculations to the upside, out of the money puts are closing, right? So that's what you want to look at. And this tool is vital in understanding what's happening in the individual planes. And then we look at the strike or the expiries on out in time. So does anything change with the left-hand plane or the right-hand plane? Not much, right? Right-hand plane increases slightly. So out of the money speculation, delta balance is above zero and rising, But then when we get to the 17th, right, expiry, that's the monthly, then we see this start to drop off. Okay, so indication would be that CRCL could rise into the monthly expiry. Now, this may change as the structure changes, right, into the 17th. So I don't want you to look at this and say, oh, okay, I'm going to make my decision on this, because this can change day over day depending on what's happening with the speculation. But after the 17th, you see some weakness come in, right? Delta bounce drops below zero, out of the money call speculation starts dropping, and then your out of the money put hedging starts increasing, right? Or in the money calls start closing, and that's where you get that move below zero. So this delta bounce tool that we've developed is really vital. It's a mosaic picture of looking at our web app and saying, okay, does the structure advance? And then what is happening in each individual plane? Are market participants speculating to the upside? Are they staying the same, or are they speculating to the downside? And what strikes are the most important after those expiries, and when does that change, right? So if you were looking for a swing trade into the 17th, okay, looks fine, looks okay. We're kind of sideways. I'd like to see that continue to go up. But after the 17th, you probably want to take notice, because this is indicating that weakness could come into CRCL after the monthly expiry. So that's what I would say, how you would look at this swing trade. I hope that helps, AJ. And that's why, we put the delta, we have all these other tools. We have our GEX ratio also. The web app does not, the net OI does not change on the web app during the day. It changes when the CBOE settles the settlement after 4:30 for all exchanges. That's when the web app will update with a new OI. And then obviously CRCL does not have daily expiries. It only has weekly expiries. So that's what you're going off of. Now SPY and everything else has daily expiries. So yeah, so DBH does not update every 5 minutes. We don't run that automated. We look at it in the morning, and then what it is, I mean, so that's why we use our intraday volume analysis. And then the web app, as we go up and down the option structure, the net OI is not going to change, but we recalculate the Greeks, and that's what that net stat command does. So we recalculate the Greeks. So this, what I was talking about this morning, is it was easy for us to go put dominated, right? We were call dominated to start the day, but it was easy for us to go put dominated depending on what speculators were doing, right? So that's what's happened, right? We recalculate as spot price moves up and down the structure, we recalculate the Greeks. So we're put dominated now. So weaker state, and we're at transition, right? Weaker state. If we go below transition, 6640, then that would be pretty important. That'd probably indicate maybe some more weakness to the downside at 6625, somewhere around in there. Staying above transition, 6670, 80 to the upside. But you see all these in the money puts stacking above us, right? So that's going to be difficult to move above unless we see that out of the money call speculation start to ramp up on the vol M command, which we're not seeing at the moment. So hope that helps. Good. Cool, Sherman. Yeah, I mean, looking at these, these tools we've built for the option structure really do give you an insight into how market participants are speculating, on out in time, and that is the key, right? That's the tail that wags the dog. We want the speculation to the upside. We want the net deltas green, right, or fairly green, and then we want to see at each expiry, does the structure continue to move up? Does the speculation in each plane continue to move up? And that's what gives you the tailwind on these stocks when we're swing trading. So yeah, we can look at Q. So we pulled all the way back down to 45 again, right? So we're just chopping back and forth. We'll look at the Qs. I'll pull up the vol M command for Qs. We can look at everything. We'll run through the Qs here. So Qs are call dominated, so they've been a little bit stronger. So flipped here on 597, 595. So pull back to 595 would most likely be supported. PGX COI, COTMP down there at 593. Let's look at the volume command for the Qs. I think it was fairly flat when I just looked, so not much speculation across the ETFs. Yeah, so it's call centroids flat, put centroids flat. So this is that Austin Powers stuck between these two lines, right? Just chopping back and forth. Nothing really going on. Look at the minute chart. Yep. So you see the largest gamma strike here, a positive gamma below us. Again, 595. That will continue to be supportive. COI, just what we went over on the web app. So yeah, not much really to say. We're just pretty much stuck. And even if we pull back to 595, I'd anticipate that to be supportive. So yeah, so plus Gex 595. So just everything, most likely on the Qs, any pullback there would continue to be supportive. So hopefully that helps on that. RDY for 1 minute updates. RDY. I don't know what RDY is. RDY, not that's a stock, right? I can't remember, but doesn't meet our criteria there for the 100,000 filter on the OI. So that would not be in our database of stocks. So. All right, thanks everybody for joining us. Make it a great afternoon. We'll see you later. If we see any major changes, we'll keep you updated. But as for now, chopping back and forth. If we lose 66.40, we'd look for some more weakness to the downside. That's the bottom of DS, key area on all expiries. So market trend model continues to show weakness here. So if this selling does pick up, that's probably the direction we would go. So, all right, thanks everybody for joining us. Make it a